Hey Brett, it's Justin here. My question is basically about implied volatility. I've been watching most of your videos about it and I understand it as much as I feel like I can without having paid the tuition just yet. My question is around where to find good data. You've talked about historical data and how that affects the relative extremes of the implied volatility. So whether it's high or low is based on its own historical data, but I can't seem to find that in the app that I'm using. So I'm currently using the Fidelity Active Trader Pro, mostly because I've had a Fidelity account for a long time with my Roth IRA and some other 401k work investments, things like that. But I've now got some surplus income that I'm looking to invest a little more actively. Maybe not invest is the right word, trade a little more actively. But I guess I'm trying to find that data that you're recommending, and I'm having trouble finding something that is easy to use and makes sense to me. So if you don't have access to the Fidelity Active Trader Pro application, maybe another application that I could look into. I appreciate all of your time and helping us make better trades.
Great question. Awesome question. And if you've been watching my channel, you've probably asked yourself the same thing or you've asked me in the Discord. So I think now is the time to talk about this implied volatility. I'll talk about it quickly. If you have no idea what's going on with implied volatility, when you trade options, we have intrinsic and extrinsic that make up the value of this option. What you see, the premium, if you will, right? So with the premium being affected by implied volatility as part of the extrinsic value, we have to worry about it, but it's all relative. So if you see something that has an IV of 60, is that high? I don't know. Because it could have once been 130. There's no overall market percentage of what's high IV and what's low. So we need to look at the past historical value. So we need a place that we can find this historical IV. There's very, very few places to find it for free. I'm going to be honest. So when people hear about IV Crush or IV, they think IV Crush or don't trade into earnings, which is good because we're in earnings. So is this good if you're a buyer or seller when it comes to options? As we come into earnings, there's a lot of unknowns. What's earnings going to be? Were they profitable? Are they going to increase their dividend? All these unknowns, which causes, through extrinsic value, the value of the option to increase. And it makes the premium then increase. So we're like, oh my God, we're killing it. Then options come out and all those unknowns go away. We know exactly what your EPS was. We know everything. So the value of the option tumbles. That's IV Crush. That's when you're like, why is the share price going up over earnings, but my value of my options is going down? So that's IV Crush. But then there's general in between earnings. Where do we find this data? And Robinhood's not going to, any app that you're using for free is not going to give you this higher level of data, if I'm being honest. In the talks of all through my Discord and stuff, and how are we going to manage this and how are we going to figure this out? How are we going to use this to our advantage? The easiest thing to find as far as free data is going to be the IV rank. So there's a bunch of different datas. There's IV percentage, and IV rank. The easiest one I think that you can find is IV rank. And here's the free resource that I'm going to use. Know this. You get what you pay for. Okay? Now, I've talked about, or I'll respond in comments that I use Market Chameleon. Okay? I am logged out because I didn't want this to be skewed. So I'm logged out. Okay. I didn't want this to be skewed. I wanted to show you that these are things that you can get for free. Market Chameleon is expensive. All right. I pay for it. I use it as a write-off. It's expensive, but the free stuff is worth it. I have Starbucks up right now. Over here on the left-hand side, you have stock info, summary, chart, dividends. Okay. And it gives you kind of this little bit that you need. And you can find the rank right here. Rank's probably the easiest free information to use and very, very valuable. And if I'm being honest, that's what I use, the rank. But if you want this in more detail, if you come down to options volatility, and you type, and then you click implied volatility, This is where it explains what rank, what percentile, and what divergence is if you don't know. So it really, really helps you out. You'll find rank, if you see rank, and it tells you right here, Starbucks IV percentile rank. Starbucks has an implied volatility of 26.2. So you're thinking to yourself, 26, that's low, right? 26. This is why we need historical IV, which is in the 84th percentile. This means that 84% of the time the IV was lower than the last year than its current level. That means in the last year the IV was lower 84% of the time. So is this high or low right now? It's high. It tells you up here it's elevated. All right. This rank will get you there. That's what I look at. I look at the rank. Has the IV been lower this percentage of the time? All right. So currently 84. That means it's been lower 84% of the time. That would make it high. But the reason we talk about this, and I've talked about convergence and divergence of the means and statistics, I apologize. Traders frequently use the difference between implied volatility and historical volatility to measure the divergence from the mean. Meaning, when we have an average, okay, we have data all over the place. We draw an average line. It is more likely for the current state to converge back to the mean. If it's up here and the mean's down here, it's going to diverge back. If the mean is here and it's down here, it's going to diverge back. So that's how we kind of know if it's high or low. We use the mean. Using 250 HI as the long-term benchmark, the implied volatility 26.2 is currently 19.7% above the mean. So whether you look at the rank and say it's 84, which means it's high, or you say it's 19% above the mean, it's going to come back down to the mean. And you can find all of this right here on Market Chameleon. This is really all you need to know. I'm sure you can find it other places. Let's go to Peloton. Peloton's at 100% volatility. So now what does that mean? That means that right now the value of the options are heavily influenced by IV. So if you were to sell an option that you want the value to go down, it might be a good time to do so, because there's a good chance with it being 100%. That means that 100% of the time in the last year, the IV has been less. So when we are selling options, calls, or puts, like my puts, that means there's a very good likelihood that it has to diverge back to the mean, 79% above the mean right now. Now it would be a terrible time to buy options, which is why I'm not going to buy the puts right now on Peloton. Everyone's like, Peloton goes down every day. Buy the puts, buy the puts, buy the puts. When you buy an option, we want our options to go up in value. So when you buy an option with an elevated historical IV rank, you are shooting yourself in the foot. You are putting yourself at risk of IV crush. All right? What about Facebook? Right now, everything's going to be an elevated, 97%. So not a good time to buy options on that. I'm an idiot. I bought one. What's not? Let's think. Who's pretty? Intel, INTC. They're even elevated, 70. Smith & Wesson, SWBI. 47%. They're moderate. So if I go to their volatility and we get some more detail, what that means, they're at a 47, which means that 40% of the time in the last year, it was lower. So we're about average. So the current is 6.2% above. So this even has a little bit of volatility that can come down. And you can see with their free trials, you can get stuff. But if you just need historical data, Market Chameleon's probably the most reliable source. I've paid. So, but when on my paid one, I see this, but I just see it as a chart. Right? Like here they tell you the last year on the graph with the 7-day chart, they just tell you the whole year.